Well, as we said at the top of the show, the European Union is committed to a relationship with South Africa, but there are some concerns, and among them are BEE legislation, corruption and currency volatility. Karema Brown attended the launch of the White Book on EU trade and investment in South Africa and is joining us now at the desk with more detail on that front. Karema, thanks so much for joining us today. Well, let's go straight into some of the main areas in focus at these discussions at the EU Trade and Investment Conference that's currently taking place in South Africa.
Well, it's not a conference that's taking place. This was a briefing that the ambassador to South Africa had, and it comes off the back of the 5th summit that was held in Brussels recently. And essentially what the ambassador did was to give the media an insight into the discussions that were had. And as you know, the EU remains South Africa's largest trading bloc partner, despite the fact that China as an individual country, has overtaken them as our major trading partner. And there were two areas of focus. The one was on the fact that the EU acknowledges that the euro crisis is going to stay for a while, but called on South Africa to not treat it with less importance, as it has to, of course, adjust its own trade policies given the tectonic shifts that are taking place in the global markets. That south-to-south relationship coming into play with our BRICS arrangement. So essentially the ambassador is saying that South Africa remains a favorite investment destination for European firms. In fact, out of the 80 companies that were surveyed, 75 felt that the country was a good investment destination, but there were certainly concerns, as you've said in your introduction. One of the issues is that some companies feel that public tenders, the processes are opaque, they're not transparent, and there's no return. And they also feel that whilst they comply in terms of BEE legislation, there's no real financial advantage for participating in that. But certainly the mood coming out of Europe, very positive about South Africa. They're also aware of the fact that our trade policies have placed industrial policy at the center. So the whole idea that you come in, extract raw materials and go, companies accept that they have to add value and that they have to beneficiate. And the ambassador was very keen to say that the majority of products going out to the European Union are manufactured products, so they're very aware of the need for value add.
Karema, was the ambassador brave enough to bring up the labour unrest issue and also potential short-term political instability?
Yes, Lindsay, he did. In fact, he referred to the very high-level discussions that were had between leaders of the EU as well as President Jacob Zuma. Remember, President Zuma was there just shortly after the Marikana killings, and that was certainly hanging over the heads of these discussions. There was reports that some of the member states were incredibly concerned about the police action and what that signaled, particularly given the fact that South Africa is now a democracy. What was the final word, however, was that they are confident that the government has been dealing adequately, with the issue. One of the things that they did raise in terms of stability is the policy environment in which business needs to conduct itself. And one of the issues that concerned them was the announcement by the Trade and Industry Minister, Rob Davies, about the cancellations of the BITs. And of course, they understand that those things have to be renegotiated, but the ambassador pointed out that if investors leave South Africa, it's very difficult to get them back, and it's something that they would encourage the South African government, to pay attention to.
Of course, we've got to pay some attention to, the end goal of EU members as well, in that a trade relationship with South Africa means a springboard into the rest of the continent.
Absolutely, and I think that this is key for the EU as well. They know that they have to compete as a bloc with other, emerging markets. We've got arrangements with IPSA as South Africa. We've got the BRICS arrangements. So obviously the EU wants to use the considerable infrastructure in South Africa as a launching pad, and they definitely see South Africa as a partner on the continent. One of the key issues that came out was the progress that has been made in terms of the negotiations around the economic arrangement, the EPAs, and what the EU officials were saying to us was that there was quite quite a lot of progress on issues around rooibos, around biltong, around some of the non-wine products which were holding up negotiations. The other area of progress was, of course, in tariffs. There are concessions that the EU is prepared to make on agricultural goods. So we're waiting with bated breath to see what the negotiators will finally come out with. But I think that there is considerable progress towards the EPAs, which essentially is about creating a free trade area.
Of course, that's the conversation that was happening around trade with South Africa. What about when it comes to developmental finance specifically? I mean, we've had South Africa reach middle income status, and many out there saying that it's hard to justify the need for South Africa to continue receiving donor aid, so to speak, at a time when the EU is amidst a crisis.
In fact, this was one of the central points that were raised by Mr. Richard Young, who's responsible for dealing with aid. And he said what is happening in the EU is a debate among countries about whether South Africa as a middle income country should continue to receive aid. And the official line, of course, is that it shouldn't. And he was very clear to make the distinction between a country like South Africa and Malawi, where in Malawi 20% of the country's GDP comes from aid, and South Africa falls below the 2%. So very clear distinctions. But what was recognized by European countries was that South Africa has a special history. And what concerned European countries was the Gini coefficient, the inequalities in South Africa. And because of that past, there was an agreement that South Africa will continue to get aid, but that the nature of that aid needs to be catalytic, and that it needs to be driven by value add. So he was explaining, for example, that a lot of work is going into assisting provincial structures with developing financial capacity around being able to run projects sufficiently, and of course ring fencing development aid so that it doesn't get abused, that corruption doesn't creep in. They were also talking about research that was being done around the national health insurance. So the aid is a lot more targeted, a lot more focused, and the idea is that it enables South Africa to develop lasting systems to be able to move away from being a recipient of aid and a full-on trade partner.
Absolutely, all on the road to eventual self-sufficiency.